Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for August 27, 2023. Apologize for the late start this week. My son's soccer season started, and I have just a couple years left before it's all over, and more than likely. So we try to take it all in when we can as a family. And so with that being said, I am a day late because of a tournament. So this is going to be kind of right at the last minute going into the week ahead. But don't worry, we're not going to skip a beat. We're going to talk about a lot this week. Actually, we're going to talk about a little bit of what we talked about or what happened at Jackson Hole, and kind of the problems that the Fed chair is facing. We have to talk about where the dollar closed. The dollar closed on some pretty key levels. You look at the dollar as an index, the dollar index is in breakout territory. But if you look below the surface and you really look at the technicals on some of the majors, you'll realize that we're at some pretty key levels. And obviously with this week, we have non-farm payroll and all sorts of other data coming out, specifically, all the different components in the U.S. Jobs picture. We also have PCE data. We got CPI data in the Eurozone, also in Australia. A lot of key events happening this week. So make sure you all stick around, and I'm going to be covering all those topics and more and going through all the indices. But I need to say this: if you like these videos and you think they are beneficial to you in your trading week, preparing you for your trading week, give my team a big thumbs up. Subscribe to the channel below so you don't miss these videos that we've been doing every week for the last 7-8 years. And even before that, even before I started Forex Analytics, I started doing a week ahead video, sporadically. So this week ahead video has been going on for a long time. So make sure you guys are always tuned in here every Sunday. All right. Let's get into the markets and let's get into the charts. And in Forex Analytics, you can go through the calendar and take a look at all the things, all the events that are coming up, all the macro events that we're discussing. Like if you would have paid attention, we talked about it last week during the Jackson Hole Symposium. You could follow all of the comments that were happening right here. If you decided you didn't want to listen live, you can just follow along via Live Squawk. I want to talk a little bit about Jackson Hole before I actually get into the charts on what we're going to discuss on all the different technicals. But I have to say this, that one of the difficulties that the market's having, and one of the needles that they say, the common phrase is needle being thread here by central bankers, not only the Fed chairman, but also Christine Lagarde, that also spoke on Friday at Jackson Hole, is they have to walk this fine line between, continuing to fight inflation and also the potential of a slowing economy. But if you're in the Eurozone or the UK, a really slowing economy, where you're starting to see, stagflation type of environment, the Fed chairman also has a difficult task. Now, I would have said that you could argue that his he actually said a little bit of both. He was a little bit of a dove, a little bit of a hawk, and I don't think it disrupted the dollar at all. But the one thing that I do want to point out is that I think the market is still getting over the hump that they have, that there's not going to be like rate cuts going into 2024. And that's one of the things that's keeping the dollar index specifically very well bid. And the dollar index, still closed at, if you look at the, let's go over to a daily chart, you can see in the daily chart, we closed, not at the highs of the day, but we still closed in breakout territory. And a matter of fact, let me go over to these charts. I think these charts, because I draw these for you every week. I don't adjust these drawings, so you can see what we drew last week. So you can see we're outside of the resistance. We broke above the 200-day moving average. Now we are challenging, or getting close to challenging, the highs back here from the middle of May or the end of May of this year. So you can see the dollar index closed that higher, and that really convinces us, or you can see from the market, hey, listen, the Fed seems pretty hell bent on not cutting rates, and the steady or higher for longer is resonating with the market more and more, and that's why the dollar continues to hold on to its bid. The flip side of that is, the stock market is actually holding up quite well in the face of this, and so are yields. And we'll obviously talk a lot about what's happening in the 10-year yield as well, because obviously this is threatening a really big breakout, and that means the bond market's threatening a big breakdown here. So the dollar index is kind of pulled in a couple of different directions overall. Matter of fact, let me get rid of my video here so you can see more of what we're talking about. So here's the dollar index. Like I said, we're in breakout territory, but there are a lot of currencies that are on the cusp of breaking out or so dang close. Now, I need to start off by saying that looking into next week, on Monday, there's a UK holiday. So if there might be a little bit less liquidity, but last week we talked about this head and shoulder pattern developing in the cable, and I would say that we are threatening. You could argue that this is the neckline. Now, when I say that the dollar index is very close to breaking out against currencies, this is one of those that you can say, okay, we're at the support zone of the head and shoulder pattern. You could draw this and say, all right, there's the neckline, yeah. And by the way, if this head and shoulder pattern plays out like we discussed last week, this can actually play out towards 120. If it really starts breaking down. Now the good news is, for next week, as far as UK data goes, there's not a whole lot of UK data that's going to drive the market. But there is a lot of U.S. data that can drive the market next week. So that's the problem with the sterling. It's not going to get any help. If the dollar ends up continuing this breakout higher, the cable is going to succumb to this selling pressure, because if it's overall dollar strength, you're going to see the pound dollar really come under pressure. And remember, there's a lot of people buying. There's a lot of longs that are specifically staying long while that sterling stays above this 24.50, 24.60 level. We start getting below there, this big breakout, this, you can see it's a nice double top. That's a big breakout point for the market. We start getting below there, and you can see the 200-day moving average is not far away from that. We start breaking below those levels, and I wouldn't want to be long the sterling in any way, shape, or form. That's not even long, pound dollar or cable or sterling, whatever, pound sterling, whatever you want to call it. I'm talking about like the euro sterling, because it posted actually a false breakout last week. Let me break down as a false breakdown. I don't know where it's at on my page. I thought I had it up here, but I don't. So let me pull it up for you really quick. So you can see the euro sterling. We did a little false breakdown and then a reversal last week. We're above the 50 DMA. So because of that false breakdown, yeah, I mean, if the pound dollar starts coming under pressure, that specifically is a big deal. Okay, now let's go into Tuesday, because Tuesday we have U.S. consumer confidence. We have the JOLTS jobs numbers. We actually also have Mexican GDP data, which I'll talk about the peso here in a second. But when I talk about the dollar, and we talk about the dollar index and how important these levels are, and why I'm not 100% convinced yet that the dollar is going to fulfill its breakout. This is, just look at the candle really quick. What you see here is a black candle, the Thursday's candle, which is a Morrow candle. It's a bearish candle. We had a down day, spinning top. If for some reason on Monday, now remember, Sunday, Monday, we could actually have a green candle, maybe a recovery, because we closed basically on the 200-day moving average. Mark Chandler from Bannockburn, he actually said, we closed below the 200-day moving average. We did, but it's close. When you're within pips, I have to say that we're probably respecting that level. We're also at the 78% retracement. You can see if you look right, it's 107.75 here. So yes, we're below horizontal support, probably just enough to trigger some sell stops to get some people short. And we're below the 200-day moving average. Got a lot more people short. But what if we see a bit of a recovery on Monday? Well, then we're going to get a squeeze back higher just to the 50 DMA. Remember, we're at a lot of key support here. That's what I'm trying to illustrate with you all. The euro is weak, and by the way, I think come Thursday, Friday, because Thursday we have European CPI data, and then Friday we have U.S. Jobs report. I think by Thursday, Friday, we're going to know what the direction of the euro is going to be going into the beginning of next month. But this is a prime example of the dollar index is breaking out, but you got a lot of currencies that are just on the edge, and this isn't the only one, so don't worry about it. We're going to get to those as well. So anyway, on Tuesday, U.S. consumer confidence, JOLTS data. We have Mexican GDP data coming out, and look at the dollar Mexican peso. It cannot get out of its own way. Yes, we came out of a descending wedge, but if we came out of a descending wedge, we could very easily see a move to test the trend line and reverse. You know where we saw a similar pattern, but upside down, flipped on its head? This exact chart, but different. I mean, it's a completely different index, has nothing to do with Mexico. But do you want to see what it looks like when it actually hits that support and reverses? Go take a look at the German DAX. Let me show you. We were going to look at this chart anyway, but I'm going to do it early. So you can see we came out of an ascending wedge. We broke down. You guys see that, right? We broke down. And then let me draw it out for you just so you can see it a little bit better here. So yeah, here's your ascending wedge, right? It's this whole ascending wedge. We broke down, we came back and retested. That means we hit new highs, retested that trend line, and then reversed, right? So if you think about what I just drew there, do the opposite of that and do the Mexican peso. What could very easily happen here is we see a new low, a test of this trend line, and that means it gets everybody short, and then we see a reversal, right? Because you're going to see this relative strength is going to be divergent. So I map all this out for you. It's not something that's going to happen this next week. Well, actually, I take that back. It could happen as early as this week. However, the one thing I do want to say is the Mexican GDP data could drive that us down there, but it's not just GDP data that's coming out of Mexico this week. We also have Mexican employment or unemployment. We also have U.S. employment this week. So there's a lot of factors that could actually drive the dollar Mexican peso to new lows. Now, remember, this is the carry trade darling of the FX market. And, while we're below 1745, it's just, nonstop Mexico pressure. You can see it not only in the dollar mex, you can see it in the Mexican yen, you can see it in the euro mex. It's been a fiesta in the peso. Let's just put it that way. All right, continuing on with what's happening this next week. Wednesday, we have German and Spanish CPI data. So obviously, we need to pay attention to that. Also, by the way, Wednesday morning, Tuesday night, what we should look at is we should look at Australian CPI. Now, here's the thing about Australia. I've tweeted about it. You guys have seen it on the week ahead video. Obviously here, go last week, go the week before. Look at the weekly chart and look at this major support we're sitting on. It's a big triangle support. That means that since the COVID lockdowns back in 2020, early 2020, so here we are. Can you believe it's been over 3 years? 3.5 years later, we're in a big, massive consolidation, big triangle, which if you just zoom out a little bit, you go, okay, well, the trend is predominantly down, so it should be a resumption of trend to the downside, which it should be. But we can't ignore the fact that we're at major support. So the reason why I say that is last week's low, not last week, the week before last, the low was 63.65, I believe. It's 62 or 65. Let me look at the low. 64 and 0.9 of a pip. So basically 63.65. That was the low. You can see it right over here. If we break through that low from a week and a half ago or 2 weeks ago, that's going to, spawn some more downside pressure, especially after 2 weeks of a consolidation at these levels. Why do I say that? Well, you look at the double top. The double top still has some distance to go. We still have 62.80 would be where we eventually target. And if you want to get intraday technical with myself, and we've been talking about this in the Forex analytics community. By the way, if you guys are not part of the Forex Analytics community, this is what our chat rooms look like, and you can see all the conversation. This is Friday afternoon, so just keep in mind it's not. Whoops, I didn't want to do that. This is, you can see we have the news and research room, we have the general chat room. You can just go through all the conversations that we've had. We have our trades room where we post what we're buying and selling, not just myself, but also you can see other traders in the chat room as well, talking about what they're doing. We have the S&P indices room, talking about all these different markets. This is just the chat room, which comes with the Forex Analytics community or our product platform that you see here. So not only do you have all this analysis, but you also have, our chat rooms where you're going to find myself and the rest of the team and a lot of traders. We have a probably one of the most active trading communities around. So make sure you check us out. Okay, back to what I was saying with the Aussie. What we've been talking about in the community is this bear flag pattern that's developing. So the bear flag pattern, if you think about where it can go, it could also trade down to 62 and change. So with that being said, you have to be really careful because Australia not only has CPI data this week, but we're dealing with inflation data out of Australia, which obviously disinflationary pressures that you're seeing globally, that could weigh on the Aussie. But then you have the combination of all the U.S. data coming out. So if the U.S. dollar continues to strengthen, Australian CPI is weak, we could see the Aussie dollar actually break down this week. So that's just the Aussie, but I should probably mention the Kiwi because we talked about the Kiwi as well, right? Like being very pivotal at the 60-cent level. Go back to last week's week ahead video because New Zealand had retail sales, if I'm not mistaken. I have to go back and check the calendar. You can go ahead and watch the week ahead video from last week. We talked about how important that 60-cent level was. Well, guess what? I think the high last week was, let's see. The high was on that day, 59.85. So it just stayed below 60 cents, kept the downside pressure on. But again, you want to talk about the dollar index and being at really key levels against a lot of these majors. The Aussie, it's on 64 cents. The Kiwi at the 618 retracement at the 59-cent level. Yeah, we probed below it on Friday, but we still closed right at 59 cents. It is a weekly key golden Fibonacci level. So you can see how important, okay, the Euro's on the 200-day moving average. The Aussie is on the 64-cent level. The Kiwi is on 59 cents, right, as we're pointing here. And, we haven't even talked about Canada and the Swissy, and the dollar yen, which I'm going to talk about here shortly. And by the way, if you want to take advantage of all of these really, really great setups that we have in the market, well, you should check out the Trader Funding Program. Because if you want to learn how to trade our money, our capital, and you don't have the money to trade, or you don't have, let's say, $25,000 to have an account of $25,000, or you don't have a $1 million trading account, but you want to trade our capital and keep 75 to 90% of the returns, well, take an assessment. It's a one-time fee. You take an assessment, and if you can pass the assessment with unlimited time and having access to our community, we give you access to our community for a certain period of time based on which account value you choose. Because, yeah, if you're going to trade $250,000 or $500,000 of our capital, we want you inside of our community so you can talk to us. You can have good trade ideas. You can talk to other traders that are in the Trader Funding Program, and you have access to our community. Like I said, so you can be in the chat room saying, "Oh wow, hey, crude oil is moving. Oh wow, crude oil is slipping. Oh geez, the dollar, the euro has rallied back. Oh wow, great. Maybe there's some trading opportunities there." We want you to have those ideas. So anyway, check out the Trader Funding Program. There's a link in the description down below. Also down below, there's a link because I passed an assessment way back in the beginning when the prerequisites to pass were the most stringent that we had, and I tell you how I did it. So click on the link down below. All right, back to the analysis. Back to what we were discussing. So Kiwi dollars on key support. Continuing on with what's happening on Wednesday, we have German Spanish CPI, we have ADP data, we have the US preliminary GDP. So all this data that could really move the dollar index, and I'm going to actually take you over to the yen. Let's talk about the yen here. Okay. We were talking about a head and shoulder pattern, never played out. So let's just go ahead and delete that. The dollar yen just continues to hold up because yields are holding up. And the dollar yen overall, you can see this butterfly target actually takes us a little bit higher. So when you're talking about US data and you're talking about yields, the most sensitive pair to US data and US yields is going to be the US dollar Japanese yen. While above 145, if you guys can't see it, let me draw it out for you. This is a bull flag pattern, and we are trying to play out to the upside right now. And you can see on Friday, we actually closed outside of the flag. Now, if the flag completes, the flag will take us to the 150 level. Okay, so that would be the upside target for the bull flag pattern. Now, we have not heard much from the BOJ or Ministry of Finance. Everybody's on intervention watch, but, you know, maybe their intervention level is at 150. You know, you got the US dollar Japanese yen rallying. You got the US dollar CNH that's absolutely on fire, which China's having a hard time containing. Right? Whoops, that's not the CNH. That was a CHF. Let me pull up the US dollar CNH, which we'll come back to that one here in a second. You can see the US dollar CNH, very similar pattern setup. China is having a very difficult time containing this one. So, you know, hey, if the US dollar CNH goes higher, why couldn't the US dollar Japanese yen, you know, move higher with yields as well? So that's kind of the setup that we're seeing here with the US dollar Japanese yen, but you have to be really careful if you're buying it. You just have, I would keep your stops relatively tight, because comments from the BOJ or the Ministry of Finance, and they start checking rates, getting ready for intervention. They could intervene. That could send this pair lower really quick at any moment. So just, you know, keep that in mind, even though it is a bullish setup. But again, we have so much US data, especially with on Wednesday, we have ADP data coming out that could really move the market. Now, we have pending home sales. As I told you, last week, the new home sales, probably going to be great numbers. They were. They were solid numbers. Why? Because inventory is low, and you have builders that are, you know, scurrying frantically to add inventory. But as far as pending home sales go, that means existing home sales is a component of that. And then you know, homes aren't moving here in the U.S. because everybody's trapped. Well, people that have bought mortgages can't move. You know, and really the only people that are moving are trying to be first-time home buyers, perhaps, or people that have to move because of work or family. Other than that, our housing market is kind of stagnating here. So I wouldn't be surprised if the home sales, pending home sales numbers actually end up slipping overall. We do have China PMIs, services and manufacturing on Wednesday night, but that's the official, you know, I say the official number, going back to the US dollar CNH. That is on Wednesday night, Thursday morning, if you're in China, but also the next day, which would be Friday morning, Thursday night, we'd have the CACSN or private PMIs that will be coming out as well. On Thursday, we have South Africa producer prices. If you trade the rand, which I haven't been really active here over the last couple months with the US dollar rand, or actually the last few weeks, let's put it that way. We have Mexican unemployment on Thursday morning. We have US PCEs, which is a very, very closely watched piece of data for, the Fed. So the PCEs could move the dollar, could move yields. That is on Thursday. But Friday morning, I wanted to go over this because this is really key resistance. The US dollar CHF, which is the Swissy, is right up against channel resistance. Now, again, let's go back to the dollar index. Remember, the dollar index is over 50% of it is made up of the euro. That's why everybody focuses on the euro with the dollar index. But a big component of that is the yen and Switzerland. So notice how the US dollar Swiss franc is right at channel resistance. This is big time channel resistance. right? It's also, if I'm not mistaken, I have to go look at my other subset of charts that we use daily. You can see we are at the 50% retracement right here, just above that, the channel resistance. This is big resistance for the US dollar, Swiss franc. And remember, we got Switzerland CPI on Thursday. That could actually break this. Let me just do it this way. That could break this currency pair out or reverse it right back lower. You can see that that's really, really critical. But then we have the US non-farm payrolls. We have the Canadian GDP, which, by the way, look at the US dollar Canadian, just continuing to move higher. It is threatening a breakout towards this resistance here. So you can see that horizontal breakout, but then we have channel resistance just above that at 137.50. And then we have ISM manufacturing data that comes in, which usually when you're at the beginning of the month, you see non-farm payroll, you get a look at services and manufacturing PMI. Since the first lands on Friday this next week, we are going to get the jobs report, ISM manufacturing after the jobs report, and then services will be the next week after the Labor Day weekend. And by the way, next weekend is a U.S. holiday. I will be out next weekend, but don't worry, you're going to get a different flavor of analysis probably from Ryan Littlestone or Gregor Horvat next week. So just want to keep that in mind. Now, before I move on, I need to mention, and I need to say again, feel like I got to catch my breath here. If you like these videos, or if you think they're great for preparing you for the next week, make sure you give us a thumbs up. The team works around the weekend, putting this video together, making sure it gets edited, posted out on social media. So give them a big thumbs up. I'd appreciate it, and I'm sure they would appreciate it too. It makes them feel good, like, feels like you guys are really appreciating this. Also, if there's something I missed, which I'm pretty much guarantee you there's something I missed over the weekend, that maybe something I didn't say and I might have missed a topic, jump in the comments down below. Tell everybody else, hey, Blake, you forgot this. And I'm sure I probably did. So anyway, let's go into the last thing I wanted to cover with you guys. I wanted to cover the indexes because I believe they're all very, very important. So let's start. And I know we took a look at the S&P, but notice how the S&P is developing a head and shoulder pattern. Now, this is kind of a nice development, but I also have to mention here, and let's go ahead and draw this out for you. Several people in our community had realized that this is setting up. So let's just put it that way. Now, here's your head and shoulder pattern, right? I also want to state that one of the things that are the best type of developments with a head and shoulder pattern is making sure that you have symmetry. Now, the market doesn't always give us symmetry, but if I had to guess, our symmetry would look something like this. This is where, we got the continuation rally. So, whoops, I didn't want to move that. Let's push that back. Let's grab this box that you see here. Let me just see if I can grab it. There we go. Grab this one. Yeah, let's move that over. So if we have symmetry, which that means that support could really hold here and we could have a couple of weeks of a consolidation. Does that make sense to me? It actually does. Why? Well, this is the last week of summer, right? I mean, most traders get back to their desk the first week of September. Everybody knows that it is next weekend is the U.S. Labor Day holiday, right? So on September, let's figure out what day that is. September 5th, right? On Tuesday, traders are going to be at their desk. Tuesday, 5th, 6th, 7th, trying to travel back. You're going to get everybody back in their desk, kind of taking a look around. If you fast forward to if you fast forward a little bit to the 5th or 6th, that means that we are, let's figure that out. 5th or 6th would be right here, or the week of, right? So if you think about like traders getting back in front of their desk, no one wants to get too aggressive on the bearish side. No one wants to get too aggressive on the bullish side. and we're still waiting for data incoming. And if you think about this week's data, the jobs report, let's go look at the jobs report. The market is looking for 169,000 jobs, down from 187,000 jobs. So the market's looking for a weakening of economic data. Now, ADP has been coming in much greater than expected. You know, the private jobs data that comes out on Wednesday. And Wednesday, the market's looking for 201,000 jobs. Let's say that data comes in, 180,000 jobs. So it misses expectations, and the market's going to go, wait a second. They're usually overshooting, and it came in below expectations. So how about the jobs data that we're expecting 170,000 jobs on the official data? How about if that comes in worse than expected? And if you guys haven't seen all of the revisions to the jobs data every month, it's like the revisions are pretty aggressive, downside revisions, by the way. How about if the jobs data actually starts coming in, the headline number starts coming in below expectations? Well, if we get a number that misses, people are going to think that the Fed is not going to they are not going to raise rates in September, and that could put in a bid in the stock market. So economic data is going to be very, very important, on Friday. And what that could mean to us is that we continue to, and I'll put that back. Let me put that back over here. We might be developing another couple of weeks of a head and shoulder pattern before we start playing out to the downside. As I've mentioned to you over the last several months, we're in an ascending channel, right? We hit the channel top several weeks ago. We're now carving out a top. There's a good chance that we go to the 200-day moving average. The head and shoulder pattern will target the 200-day moving average and channel support. Now, if we end up breaking down below 4,300 and we end up coming down to 4,200, as I mentioned a couple of weeks ago, remember I drew this for you. A couple of weeks ago I said, yeah, or maybe even last week, oh yeah, we're going to get to the 4,200 and then we're probably going to bounce off channel support. Well, this is going to be really pivotal because you're going to have bears that are looking to, drive it towards 4,000 because of the head and shoulder pattern, but we are going to be at technical support. And as I mentioned last week, that what's going to drive us lower is that the market perceives that we are heading into a recession into the second half of the year. And if that is truly the case, then we should end up breaking down. But I'll say this again, and I'm going to say this slowly. There's a good chance, because of the symmetry of this head and shoulder pattern, that we can spend the next 2 weeks building out the right shoulder before we actually break down. Then, you get into the first week or two of September, market goes, oh yeah, economic data is weakening. Here comes the Fed. The Fed's going to, say we're going to keep rates higher for longer. I don't want to be long ahead of the FOMC, September 20th or whatever, 20th or 22nd, whatever the day is. 3 weeks in, I don't want to be long the S&P anymore or long stocks. We start seeing some selling pressure going in anticipation of the Fed at the, 2/3 into September. Again, I'm just trying to give you a battle plan of what to think and how the market might be thinking in the weeks ahead. And if you appreciate that, make sure you hit, what do they say? Smash the like button. Smash the like button. Yeah, do that. All right, let's go over to the Nasdaq 100. Nasdaq 100, we are looking at, potentially us moving lower. Look, head and shoulder pattern developing here. It's very obvious. So let's just draw it out for you. There's your neckline. Head and shoulder pattern would point somewhere down here. That seems like an eventuality. But again, if you think about, well, if we have symmetry, what's that look like? Well, the symmetry is going to look something like this, right? We still have a couple weeks to build that out. That's possible. Dow, we closed back below the 50 DMA, but the 200 DMA will probably support. Now, we also mentioned the heartbeat of America, right? Not looking so good. We are above the 200-day moving average. We have a bear flag that we have targeted, But is it possible that we get a little bit of a false breakdown here and we just kind of consolidate a little bit more? Russell 2000's had a hell of a sell-off. Yes, that's a big double top. Yes, I think we are going to eventually go down to this triangle support. Are we going down there tomorrow or next week? Again, you know, I think the Russell is going to be following, you know, toe-to-toe with the S&P, the Nasdaq, and the Dow, right? We've had a hell of a sell-off, and we're consolidating the selling. You know, the longer we sit here and the longer we consolidate, the more likely is that we have a bear flag pattern that plays lower, and that's kind of what I expect. I expect this this consolidation to continue. Whoops, not like that. I expect this consolidation to continue like this, and then eventually, you know, roll over in the Russell 2000. That's what I think is going to happen. But what I think will happen and what happens isn't always the case, right? Last couple indexes I wanted to show you. I wanted to make sure, well, I actually need to show you gold, so don't go far. I want to show you the Nikkei. Okay, remember we talked about how important this level is. Now the Nikkei is, you know, I think it's going to be more driven by what's happening with JGBs and the BOJ. So keep that in mind. Remember, 30,800 is where the rubber meets the road, or the bull bear line for those of you following the Nikkei. And the DAX I showed you a little bit earlier. Hell, we get below this 200-day moving average. This is where, if you own stocks in the German DAX, this is where, excuse my language, this is where crap gets real for bulls, is if we get below the 200 DMA. Are we going to do that? It's going to be tough to see the German DAX sell off without U.S. equities. In other words, I think it's going to be more of a global sell off. So, you know, do we have a couple more weeks of the DAX, you know, consolidating before we get, you know, a real big move? Sure, I think that that's a realistic expectation moving forward. Okay, last but not least, let's take a look at gold, because gold's a big deal. Gold is, you know, a big deal. We bounced off of the support. I drew that last week, right? That huge trend line, big quadruple confluence, horizontal support, 200-day moving average, 38% retracement. We bounced. Gold doesn't look as good as silver does, but gold is going to be driven by the dollar. So what happens with this dollar index, and one of the reasons why I think gold hasn't rallied, is because the dollar has been rallying. And, you know, yields have been flying. Now, if yields can reverse and we start to see the 10-year start to move a little bit lower towards the 50 DMA, which happens to be right here on this trend line, you can see it right there, right? It's right there. If we can head back down towards the 50 DMA, that's going to open up the door for the gold market to rally. And then, you know, silver, you know, may rally more too. This pattern, I think, is still valid, by the way. But that doesn't mean we can't go up here first before we reverse. So, with that being said, I want to say thank you all for spending your time with me. I know this video is a little bit late. I like to get it out usually on a Saturday. But family, as for all you guys and gals, it should always come first. And so I'm enjoying my son back at playing football or soccer, you know, depending on how you look at it. Anyway, I hope you all have a great remainder of your weekend. Good luck next weekend. Make sure you catch not only myself on the Face Show next week, but if you guys aren't listening to Ryan Littlestone, K-Man, Stelios and Steve on the Flow Show during the European hours, make sure you're listening to that show. It is free. And then catch me and my fresh thoughts every day with the rest of the team on the Face Show every day. So we'll see you there tomorrow, actually. Have a great one. Thanks everybody for tuning in. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.